Mark, tell us about the results. How did Medibank perform over the past 6 months?
So we saw continued improvement in our policyholder trajectory. We grew 20,000 policyholders over the last 12 months, which is a real highlight of the result. We also saw good cost control and a very strong capital position. Unfortunately, the elevated claims environment we saw at the back end of last year continued, and this had an impact on our financial performance.
Profit was down this half. What contributed to that result?
So our profit before tax was down 7.1%. That reflected a reduction in our group operating profit, and it was partially offset by a strong return on our investment portfolio.
What's influencing this rise in claims?
There are two major drivers, Mia. Firstly, increasing prostheses costs and also increasing dental outlays. The increase in dental outlays reflects an investment by Medibank in its Members' Choice Advantage dental network, which gives our customers increasing services with no additional out-of-pockets, which is fantastic. The second and less explainable rise was prostheses costs, where we've seen the rate of prostheses utilisation growing at almost 5 times the rate of hospital admissions. That's definitely not sustainable, and we'll need to look into that further.
Mark, how are you managing your own costs?
In the current environment, it's really important we pay particular focus to our own costs. We're really pleased that our management expense ratio improved 100 basis points to 7.5%. We've achieved this through our productivity program. We have a 3-year productivity program. We're targeting 50 million across the 3 years, including 20 million this year. But it's really important that we balance the short-term productivity objective with the long-term health of the business, and at the same time maintain our customer focus.
And finally, Mark, what's the outlook for the year ahead?
So Mia, we're on track to stabilise Medibank policyholder numbers by the end of FY20, which is fantastic. We're confident that our health insurance operating profit will be stronger in the second half. And we're also expecting to pay dividends at the top end of the target range of 75 to 85% of underlying profit, which is reflective of how important dividends are to our shareholders, particularly retail shareholders.